Welcome back to Crypto Atlas, your daily source for crypto whale alerts, crypto market news, and DeFi gems. And today is insane. We're seeing massive Bitcoin whale moves. A $217.5 million buy order on Binance, a 14-year-old wallet suddenly waking up, and even JP Morgan Chase preparing to use Bitcoin and Ethereum as collateral for loans. Yes, that's real. Plus, CPI numbers just came in lower than expected. Bitcoin's October might be turning red for the first time in 8 years, and one solo miner just pulled off the impossible. Let's go ahead and break it all down. So, first, that headline that everyone's talking about, a whale just bought $217.5 million worth of Bitcoin over on Binance. That's over 1,900 Bitcoin. And what's wild is that this came right after a string of other enormous transactions. So, not even a day earlier, Whale Alert reported 1,953 Bitcoin. That's worth around $214 million, moving from one unknown wallet to another. And guess what? Just hours after that, another transfer for almost the exact same amount. 1,953 Bitcoin, worth about $215 million, this time into Binance. And these amounts are so similar, it's hard to call it coincidence. It looks like a coordinated reallocation, possibly one big player breaking up a position across multiple wallets, or a custody reshuffle before an institutional purchase. Either way, that's nearly $650 million in Bitcoin moving in a single day. You don't see that without purpose. Now, before we talk about this dormant whale that just woke up, real quickly, I want to let you know I have a referral link down in the description below for a crypto exchange called BTCC. You can pause the video here if you'd like to read up on it a little bit more, or if you're ready to get started, you can find that description in the description down below. Also, I'm on Telegram. If you want to stay updated on things, you can find that in the description too. Now, here's where it gets even spookier. A dormant address containing 4,000 Bitcoin that's worth about $442 million just came back to life after, get this, 14.3 years. The last time this wallet moved anything was back in 2011 when Bitcoin was worth just $67,000 total for all those coins. So what makes someone wake that up now? Theories are flying. Maybe early miners recovering old keys, or someone positioning before a new bull leg. Some analysts even think it's part of an institutional consolidation strategy, older addresses being absorbed by custody services preparing for regulatory use. If that's true, it means we're watching history merge with the modern crypto economy in real time. And now, while whales are busy stacking, October, or as crypto Twitter calls it, Uptober, might not live up to its name. According to Cointelegraph, Bitcoin's October returns have been green every year since 2017. But 2025 might break that streak. So far, Bitcoin's only up around 5%, and we're slipping back into red territory. But remember, even when October goes flat, November tends to rip. Analysts are already calling it Moonvember, hinting that the dip could be setting up for a rebound, especially with inflation cooling and banks warming up to crypto. And speaking of wild timing, a solo Bitcoin miner just mined an entire block by himself. This isn't a pool, not a big farm, just one person running their own node on an Umbrel server. That's like winning the crypto lottery. The odds are insanely small. It's a reminder of what makes Bitcoin unique. No matter how big institutions get, anyone, anywhere can still participate. That's true decentralization at work. Then we've got Phong Le, who's the president and CEO of Strategy, saying that he believes a large bank will offer Bitcoin-backed custody services in 2026, and that milestone will push Bitcoin to $1 million per coin. Sounds bold, but after today's next story, might not be too far off. Yep. JP Morgan guess what? The largest bank in the US is preparing to let institutional clients use Bitcoin and Ethereum as collateral for loans, and that's by the end of this year. So let that sink in. That means traditional finance is finally using crypto the same way they use real estate or treasury bonds as legitimate recognized collateral. The program will rely on a third-party custodian to hold the crypto securely and will be available worldwide. It's not just a small pilot. This is a global rollout that could redefine how capital flows between banks and crypto markets. And it's not happening in isolation. JP Morgan already lets trading and wealth management clients use crypto ETFs as collateral, and this new program expands on that, moving from ETFs to actual coins. This shift is happening under the Trump administration's more crypto-friendly policies, which have clearly encouraged banks to experiment with digital assets again. And get this, Jamie Dimon, who once called Bitcoin a fraud, is now approving client Bitcoin purchases. That's a massive reversal. JP Morgan's blockchain arm, Onyx, already processes billions in tokenized transactions. They've got JPM Coin, a private digital dollar used for real-time settlements. And now they're adding tokenized collateral services where clients can post crypto for lending or trading. This isn't a trend, it's infrastructure being built. And with Goldman Sachs, BNY Mellon, State Street, and Citigroup all racing to offer similar services, the walls between Wall Street and crypto are officially gone. All right, so guess what? Let's go ahead and connect some dots. Whales are accumulating or reorganizing hundreds of millions of dollars in Bitcoin. A 14-year-old wallet suddenly activates. Banks are preparing to use Bitcoin and Ethereum for loans. Inflation numbers just came in better than expected. And all of this is happening as October teeters on the edge, historically a setup for explosive November runs. If institutions are moving now, it could mean that they're repositioning for something big. Maybe the first real institutional bull run driven by credit markets, not retail hype. When Bitcoin can be used as collateral, that means you can borrow against it, leverage it, and that's when Wall Street money really floods in. And let's not forget the macro. The latest US CPI numbers came in at 3%, slightly below our expectations of 3.1%. That's bullish for both Bitcoin and Ethereum because it strengthens the case for another interest rate cut, which usually sends risk assets soaring. Combine that with whales buying dips and big banks stepping in, and you've got the perfect storm for a breakout. So what's the takeaway here? Whales are moving strategically. We're seeing mirror-like transactions and old wallets waking up. Institutions like JP Morgan are turning crypto into legit financial collateral. Inflation is cooling, and we're entering the last stretch of October with a setup that looks eerily similar to late 2020, right before Bitcoin went parabolic. If you've been waiting for confirmation that big money is coming back to crypto, well, this is it. The whales are talking, not with words, but with $217 million buys. That's what I got for you guys in this video. If you enjoyed this and you're new, make sure you hit subscribe. And also, thank you very much for tuning in, guys. I really do appreciate it. You can find me over on Blue Sky. And also, thank you to my Patreon supporters, my YouTube members. God bless. We'll see you guys in the next episode.